Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment the market is testing a quite important structure level and rejecting it to the upside. In fact, what we can notice is that exactly from here, all these previous moves to the downside have been created, confirming this area is a quite strong supply and resistance zone, actually historical supply and resistance. Then, with this impulse, the market broke above the zone, and what we know is that in the market, previous resistance, once it is broken to the upside, becomes support. And the market, in fact, went and retested the level as support and started rejecting it to the upside quite aggressively. Now, as the market is rejecting this level to the upside aggressively, what we could expect is to see more bullish continuation away from this area until the market will start to show some signs of a deceleration. At that point, we could expect a correction and then more continuation to the upside, because in an uptrend, what you would expect is for the market to continue to create higher highs and higher lows. Now, in this case, we have the previous low here, then a higher low. At the same time, we had a high. Now we're getting a higher high. However, before the market can start a correction, we need to see the signs of a deceleration. Only at that point, we can get a correction, a higher low, and then another potential, a higher high. So on the monthly, so far, everything looks still bullish, but at any moment, the market could start with a correction. So let's keep that in mind and drop down on the weekly time frame. Now, from a weekly perspective, what we can notice is that already the market is in a quite clear uptrend. We can notice how we are seeing the creation of higher highs and higher lows. The last move was this impulse, correction, and continuation to the upside for the creation of a new weekly higher high. We can see that this high here is higher than the previous one. So here in the weekly as well, everything seems quite bullish. And if we will continue to see institutional buying, we could see more continuation to the upside. And we will be speaking about institutional buying in just a few minutes when we move to the commitment of traders. But for now, let's drop that on the daily time frame and see what we have. Now, from a daily perspective, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect first this correction, and then from here, the creation of a new lower low. And in fact, that is exactly what the market gave us. Then from here, I made a full breakdown explaining all the reasons for which we could expect this impulse to the upside. And again, that is exactly what the market did. And after this impulse, I explained all the reasons for which we could expect first this correction and then the continuation to the upside, which is again, exactly the move that the market just gave us. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. Now, at the moment, what do we have from a daily perspective? But well, before we dig deeper into what we have here when it comes to the technical aspect of this market, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing. And let's check the data precisely for gold. Now, what we can see here is that with the last report, net positions have rose quite a bit. We went from having 199.5k net positions all the way up now to 204.4k net positions. This comes with 5,498 longs added from an institutional perspective, showing how in the long run, institutions have been increasing their longs quite a bit on gold, going from 211K all the way up to 277K. So at the moment, from an institutional perspective, we're sitting with 277,000 longs compared to only 73,000 shorts. So clearly, institutions do expect gold to be more bullish, and they are longing gold aggressively. Now, let's keep that in mind and move back to the analysis. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. Well, as I was saying, from a daily perspective, at the moment, the market has created a move to the upside, so we have to assess the new structure that the market has created. And the first level that we must identify is this one here, which is the previous daily resistance from which all this move to the downside was created, which is now turned support here. So we do have horizontal support at this level. We must also acknowledge how, as we have an impulse and the start of a correction, if we want to measure this correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50%, 0.618 and 0.786 Fibonacci retracements, all lining up exactly inside of this zone. Now, this creates confluence of support inside of this area because we have multiple Fibonacci levels all lining up in the same area of price that is already horizontal support because, as we have just identified, is previous resistance turned support. Therefore, inside of a confluence of support area, what we could expect is to see more institutional longing since institutions are already longing, and this would further increase the probabilities of a potential push higher away from this level. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.